Folks, simply Solventless has seemingly managed to pull one more rabbit out of the hat before the conclusion of 2024. The company on Monday revealed that they would be acquiring Delta 9 Biotech, the wholly owned subsidiary of Delta 9 Cannabis, for, well, basically nothing. How'd they manage to do this? Let's dive in. Yep, you heard that right. Delta 9 is being acquired for basically nothing, at least on a net basis. And on top of that, there's zero debt attached to the deal. In basic terms, Simply has agreed to acquire the operating subsidiary of Delta 9 Cannabis for $3 million in cash, $750,000 of which is due within the next couple of days, with the remaining $2.25 million to be paid at the time of closing, which is anticipated as being late January 2025. The catch here, though, is that Delta 9 has about $3 million in expected net working capital. In other words, it's a lot of a PR move to state that Delta 9 is being acquired for nothing. But it sounds good to shareholders. And it's a clickbaity title, which, of course, as a small cap, penny stock degenerate gambler, I like. Given the fact that Delta 9 Biotech is being acquired via creditor protection proceedings, who knows what that working capital actually consists of? For all we know, it's accounts receivable that may never be collected on. Or it's just based on some inventory that has been stored in a back room for months after creditor protection was sought back in July. Your guess is as good as mine at this stage. Anyways, the assets were acquired at 1.2 times estimated annual adjusted EBITDA, which is based on no offsetting net working capital. So it's not like it was a terrible price to pay anyways, even if the whole working capital angle doesn't pan out. So what exactly did Simply acquire? Well, they're now the proud new owners of the largest cannabis cultivator in Manitoba, and one of the first licensed facilities to operate in Canada. The operation, which is based on the use of grow pods, consists of several hundred modular pods. Basically, these are shipping containers that were retrofitted to support the microprocessing of cannabis plants. All told, the facility itself is 95,000 square feet in size and is capable of producing 9,000 kilos of dried cannabis a year at a cost between 60 and 70 cents a gram. And for about $4 million in CapEx spend, the old operators estimate that production can be doubled to 18,000 kilos. Because what Canada really needs is more cultivation capacity. Anyways, the biotech currently sells dried flower into a total of 6 provinces, with its product mix also including pre-rolls and vapes, the production of which Simply Solventless intends to bring in-house to support vertical integration of their operations following the purchase of ANC Inc. earlier this year. And while Simply Solventless doesn't currently have any cultivation operations, the key to the whole ordeal, rather than simple vertical integration, appears to be the financial angle, even though the company hasn't outright said as much. Okay, so Simply Solventless may have explicitly stated vertically integrating upstream into cultivation is a core strategic mandate, but there seems to be more to the puzzle from a financial angle. Yeah, Simply has also stated that supply in the cannabis sector is finally starting to tighten, sending prices higher, and yes, the dried flower segment is 40% of the entire market. Both are good points on why one might want to cultivate dried flower. But it all comes down to the numbers. Included in the purchase of Delta 9 Biotech is a tax pool. That tax pool contains accrued non-capital loss tax pools of about $60 million. In simple terms, these tax payments are expected to reduce future tax payments by up to $12 million. And Simply Solventless just paid $3 million for them. $3 million, which they expect to become $0 million once working capital is taken into consideration. It's like getting $12 million in free money for someone that was operating in the cannabis industry anyways. And you can use that as a tax shelter. And it's expected to lower Simply's blended excise tax rate as a result of cultivators paying lower excise taxes. On top of that, the purchase is expected to net $12 million in additional annual gross revenue, bumping annual revenues by 25%, and $2.5 million in additional annualized adjusted EBITDA, which is also a 25% bump. Lastly, we said it before, but because the assets were acquired via creditor protection proceedings, they have no liabilities attached to them. So what do investors think of the deal? Well, this name has a bit of a following, and they seem to be pretty happy about it. Joe Stocks says that Hash.V continues to be the biggest no-brainer he sees for 2025. Well, Cynical Android says that buying the target at 1.2 times EBITDA is wild. Pays for itself in a year. I love the last man standing vibe of the sector. Fortunes will be made by those rising from the ashes. And Dan Stringer, SEC Pimp, says their continued deal flow is impressive. Okay, so let's wrap it up. Simply's purchase of Delta 9 Biotech can be summarized as this. You've got a cannabis cultivator generating $12 million in annual revenue, with established sales channels to 6 provinces. That revenue is generating $2.5 million in estimated annual adjusted EBITDA. While the operation may have previously gone belly up because of its outsized debt profile, that debt is now gone. And on top of that, there's over $60 million in tax pools that can be used to lower taxes owing by about $12 million. Even better yet, the asset is being acquired for $3 million in cash, with Simply believing that there is the same amount of money sitting inside the assets in the form of positive networking capital. From this vantage point, it's about as close to legal theft as you can get by the sounds of it. Let's see how it plays out. All right, everybody, thanks for watching. If you are long Simply Solventless, please let us know in the comments section. Let us know your thoughts on the transaction. Is now the time to finally start looking at cannabis stocks. Guys, I hope you guys are having a great holiday season. My favorite stretch is that stretch between Christmas Day and New Year's. And I hope you guys are having a great time with friends and family and getting some relaxation on, watching a few YouTube videos, and also letting us know what you think in the comment section. Thanks for watching, everybody.